about financing, I have to take you through, well, the most boring part of this morning, and that's our house rules. Please make sure your microphone is muted. If you have any questions or remarks, please use the chat options. We'll have 2 polls during this webinar, which you are very much invited to answer. And this webinar is recorded and will be made available later on. The first hour is plenary, and some of you have signed up for one-on-one sessions in the second hour. The second hour is private, won't be recorded, and therefore also won't be made available. So if you're in a one-on-one session, I think it's good to know that the discussions you have with either Bart or Rens and Daniëlla are completely confidential, and also we as hosts are not able to listen or hear anything you have to say. So with that, I would like to start with our first poll, also to get a feeling of in which phase of your business you're in. The first poll is about which types of financing are you currently seeking or are you currently using. So please fill this in as I will let our guests introduce themselves, and I'd like to start with Bart. Bart, good morning. Thank you very much for joining us. And please introduce yourself and tell a little bit about what you do and what the Business Angel Network involves.
Yeah, thank you for having me, and thanks for the introduction, Jonathan. Good morning, everyone. I'm Bart Heuts, Project Manager of Business Angels Network at Oost. Oost is one of the regional development agencies that we have in the Netherlands. We focus on entrepreneurs in the east of the Netherlands, so entrepreneurs based in Gelderland and Overijssel. What I do mainly is help entrepreneurs with their preparation to get the proper type of finance. And in my case is that through business angels. So I've built a network of approximately 130 business angels, ex-entrepreneurs. And the final goal is to do the right matchmaking. So to help entrepreneurs in this region find the right ex-entrepreneur, which is a business angel who wants to invest in your company. And food is one of the 4, let's say industry types that we invest in as OSNL, and where I focus on, besides tech and life sciences and energy. So that's a little bit about me.
Thank you very much, Bart. Rens, can I invite you to introduce yourself?
Sure, thanks. Thank you, Jonathan. Good morning, all. Good to be here. My name is Rens Matot. I work for the Rabo Food and Agri Innovation Fund. Prior to joining the fund, I was a corporate management trainee at the bank. So I've seen several departments, also on the debt side. So I think that is relevant also for this presentation. Good to be here, especially since an important part of my job is looking for innovative companies in the food and agri space. Daniëlla is about to tell you everything about our fund, and if you feel that your company is a great fit with what we do and offer, please don't hesitate to reach out to me or to Daniëlla, because it's not only about us telling something about funding options. We are also keen to learn more about you guys. So please feel free to reach out after the presentation.
Thank you very much, Rens. Daniëlla, could you please introduce yourself and then start your presentation about what Rabobank is doing and all the various stages of funding in the various phases of a business's development?
Yeah, sure. Thanks, Jonathan, and good morning, all. Great to be here. I hope everyone is ready for this. At least I am. So my name is Daniëlla. I also work for the Rabo Food and Agri Innovation Fund together with Rens. And I have been with the bank for over 5 years now, and since almost 2 years been focusing on on investing in startups, specifically within the food and agriculture space. I'm not sure, Kai, can you get my slides up? Because then I can dive in straight away. Today we're gonna talk about different funding options. The title is very nice, Money Talks. So I think that's important. But yeah, what sort of money should you look for? I think that's an important question that we'll try to answer today. But first, maybe brief about the Rabo Food and Agri Innovation Fund and about yeah, why is Rabobank doing this? So I hope that most of you know Rabobank. We are a Dutch cooperative bank, but we're globally leading in food and agriculture. And that basically stems from our history because we were once founded by farmers. Yeah, we have strong roots in that sector, which is why we also made it our mission to help in basically adding to food security. And a few years ago, yeah, people recognized that innovation is super important in that. So we need to come up with innovative solutions to solve the problem. And that was why, as one of the initiatives, the Rabo Food and Agri Innovation Fund was launched. So basically, it's Rabo money. So Rabobank really commits to it, and we invest in early stage companies in Europe, US, and Israel that are active within all sorts of verticals within food and agriculture. And our idea is really that we can not only support those companies with capital, but also with the knowledge and the network that Rabobank has. So we really try to open that up for the startups to help them grow and to bring successful innovations through and disrupt the sector. So that's very short about us. But as Rens said, feel free to reach out to us later if you have more questions on that or on what we do. We're with a team of actually 5. There are 4 people depicted here. I'm now on slide 5. Kai, I'm not sure if you can click through. Thank you. So Rens just introduced himself. Then it's me. We have 1 colleague sitting in the UK, and we have our manager Richard O'Gorman. Yeah, so I think most of you are here to hear more about funding options. So what we did on slide 7 is sort of depicted an indicative life cycle of a growth company for you. I think maybe before we dive in, 2 important comments I would say. First of all, I think I haven't seen the results of the poll yet, but I'm sure that there are a lot of different people watching. So some of you might feel that this is all very well known, or maybe you're a bit further advanced and you already raised some capital, where for others it might be still new. So I hope it will be interesting for each and every one of you. But if you have any questions, or if I go too fast or whatever, then please put it in the chat so we can address those later. Second one, obviously this is a very sort of stylized version of reality. I realize it's not as black and white as we have put it down here, but it's just a way to sort of help structure it and help you walk through what we think is important to consider when you're raising funding. So if we look at this slide, I hope you can all see it a bit, but I think a lot of investors usually look at companies in terms of the rounds they raise. So in the gray ribbon, like on the bottom of the page, you see, for instance, pre-seed and seed, Series A, B, C. So those are terms that investors use to look at the different funding rounds, which are usually in line with also how far advanced a company is. This is just an easy way to sort of describe the different funding rounds that investors come into the company. You see some nice lines there for sales and EBITDA. So of course, you hope that at some point you're gonna realize some sales with your company, that your idea is really successful. Also has a successful business model. So at some point you're gonna reach some positive sales. The other line is what we call the interest before earnings, tax, depreciation, and amortization, and that's a metric that a lot of that financial people love. Basically, it's basically the operational result of the company. and it's something that specifically more in the later stage of your company will be used to also value your company. So it's an important term to understand. So if we then look at the different phases, so usually you start with some what we call seed capital, and that can be usually that's either in the form of grants, so that's an important thing to look into when you're early stage, or it can already be in terms of or in the form of equity. Obvious financing providers at such an early stage, I mean, it's still usually a concept. You maybe have a good idea, maybe you had done some first validations of that idea, but it's not you're not making any sales yet. So the people then you normally turn to are what we call friends, family, and fools. So those are the first people to turn to when you're looking for money. But also, for instance, informal investors in crowdfunding, or business angels is an important group, which Bart, I'm sure, will tell you more about. But also government, of course, in terms of grants or subsidies. That's really a good one to look into when you're just starting. So then if you're a bit more further advanced, you probably have a proof of concept. Maybe you're already realizing some sales or have some pilot customers. Then you come more in the territory of growth capital. And that's also when venture capital investors come into play. Some already start a bit earlier. So for instance, if you look at the Rabo Food and Agri Innovation Funds, we sometimes also do seed rounds. But mostly they ask for some sort of form of proof of concept and some commercial traction. Also in growth capital, something that is used often is called convertible debts. So that's basically, it is a debt product, but it at some point will convert into equity. So that's something that's used often, and it's basically a way to sort of extend the time you have to value the company, because obviously if you're going to raise equity, you also need to value your company. We're going to talk a bit about that later. After that, you come more into already sort of the venture debts and scale-up debt financing. So then you get more into the bit of the weeds of financial products that are out there. And for the early stage scale-ups, this might be in the form of, for instance, leasing, asset-based financing, or in terms of junior debt, which is then basically some sort of hybrid form between debt and equity. And then if you're really far advanced and you're sort of cash flow positive, then senior debt can also be an option, or more traditional bank products we see in the market. Kai, can you press to the next slide? Thank you. So when you look at the different types of funding, basically we define three, and like I said, there are more, because you also have hybrid forms, so things that are sort of between equity and debt. So for now, I've kept it a bit more high level, but if you have any detailed questions on that, please feel free to reach out. So for equity, I mean, what really is key there is that you're basically selling part of your company, right? So you're giving up part of the ownership and part of the control. And this is a product that's more fit to the high risk, high return sort of company. So that's also why it's more used in the early stage of a company. The pros of it are that you don't need to pay a fixed coupon or fixed interest. You don't need to give up any securities. And usually by having a good network of or a good group of investors in your company, you also get access to network and knowledge that they bring. It's also something that's good to sort of increase the credit worthiness of your company. So for instance, if you're a bit further advanced and you already have raised some equity, then you might go to a bank. They see that as a positive. So they say, okay, there are investors on board here that could bring additional capital if needed. So that's a pro. And it's also usually longer term. It depends a bit on the type of investor you're looking at, but a normal investment horizon is at least 5 years. So that gives you time to build the company. The cons we discussed, I think it's important to realize that it's co-control. So I think a lot of startups and entrepreneurs are also sort of afraid that that investors are really going to take a seat on or take over your seat, basically, that they want to fully control the company. That's not the case. But it is important to realize that they own part of your company, and yeah, they do have something to say. And that could also be, for instance, on on selling the company at some point again. I mean, for investors, the idea is that the exit, as we call it, so when we sell the company again, that will be the biggest thing for their return. Yeah, it's important to be aware of that and to make sure that you understand which rights you give up to investors. Then if you look at that solution, well, that's obviously different in the sense that you're not giving away a part of your company. It's a loan you're attracting. But then again, that's only an option for those companies that have more limited risk and where you can get a fixed return. So that basically also means that you not at all in all cases, because there are some forms that don't require that, but often it requires some form of positive cash flow. Or if you don't have that, then you probably need to give up security. So that can be, for instance, a pledge on the assets you have, or maybe even personal guarantees or sureties. And of course, the loan needs to be paid back. So you need to pay your repayments and your interest. And also be aware that with debt products, with a loan, usually there are covenants. So a bank asks you to make, for instance, a certain amount of EBITDA or other metrics that you need to adhere to. So it's important to realize that you also should be able to do that, because otherwise it might result in the bank redrawing its loan or additional costs, those kind of things. On the good side, I mean, obviously it's relatively cheap. It's fiscally attractive because you can deduct your interest, and you remain full control of your company. So that's an important consideration. But it's not for all companies. That's important to say. Then grants are sort of the holy grail maybe, because you don't need to give up part of your company, it's usually very cheap. But I think here it's important to say that with grants, there usually is limited availability. So you have certain pockets of money that the government or maybe regional governments have available, but it's limited. So you need to make sure that you find the right pocket. Also, often you see that there are some restrictions on the use of it. So maybe you need to have a specific R&D purpose or something else that you need to use the money for, a specific project. And it's often, it can be at least a lengthy process. So be aware that this takes time. That's basically also for equity and debt, that's also the case. But I think for grants, it's important to, you need to get into the weeds of applying for such products. Maybe a few tips to fundraising. I'm not going to go through them all, but a few I will pick out a few. I think what we really think about the amount you're going to raise and why you're raising that amount. So if you're looking for funding, think about why you need that specific amount and how you're going to create value with it. So sometimes we speak with companies and they say like, we're going to raise, I don't know, 5 million. But then if you ask, like, okay, what are you going to use it for and how long will it last? Then they don't have an answer to it. And it's important to think about, okay, how long is it actually, how long can you survive basically with this money, and where are you at then? Another important advice is to always, if you're raising equity capital, try to get, but also it also goes for debt, by the way. Try to have more than one term sheet. So try to compare your options and see what feels best. That's important in anything, I believe. Another important one is really try to line up the right group of investors. So specifically with equity, if you're going to sell part of the company and people co-control your company, then it's important that there's a good match from both sides. So don't just spray out your investment deck to 100 investors without properly addressing what they're looking for. I mean, if you're a company in, I don't know, your newest business product for the industry, and you're going to send your deck to us, whereas we are only focused on food and agriculture, then that's not going to be a match. So just really try to think about that. Things not to do. Yeah, I think an obvious one, but it happens more than you know. Forget to share key details that transpire later. Really open up and try to be transparent. This goes for both equity investors as well as for banks. Don't try to hide or cover up things that's going to backfire. And another important one, don't start too late. Like I said, for most of these things, it really is the case that it takes longer than you think. And I see a lot of startups and entrepreneurs getting frustrated by that at some point, which makes sense. But please be aware that these things, they don't just happen overnight. So try to plan ahead in that. Another important advice is don't price yourself out of the market. Of course, startups, I mean, I can totally understand that you would like to have a high valuation for your company, as high as possible, and that's also good. But please be aware that it's also, it can also mean that at some point you're basically not attractive anymore to investors. We've seen that. Maybe startups speak to investors in the US, for instance, where some things maybe get a bit overstated at the beginning, and then companies feel they can raise against a very high valuation, but then in the end they just don't find the right group of investors. So try to come up with something where you feel, okay, this is good for me, but it's also sensible. And then I guess maybe as a final few words on Rabobank. So what are we doing? I think our aim is really to support you guys through the life cycle. So obviously we're a bank, so we can be there for the more larger corporate companies with positive cash flows with our debt products. But like I said, we also recognize that we need to be there early on. And so, that was one of the reasons why the Innovation Fund was launched. But for instance, we also have the Rabobank achtergestelde innovatielening. So subordinated innovation loan, which is really for those early stage companies that are looking for their first capital to begin, to get to their proof of concept. And I think, what we really try to tell the companies we speak with is that we are, we don't do this on our own. We are part of a large network. So we speak with a lot of other venture capital investors, for instance, but also with research institutes. You see Wageningen standing here, so that's something we try to be very much engaged with them. Of course, the communities we're sitting in. But also, of course, our corporate clients. So a lot of the clients of Rabobank that can be interesting for you, startups, to speak with or to engage with, we can help you in that. And then obviously our internal network is also important. We have a lot of relationship bankers throughout the country. We now even have our own start and scale up bankers team, really focused towards those for you, for the companies that are just starting or maybe you have started a few years ago, but that can really benefit from having specialized advice in this phase of the company. With that, we try to support you, and we hope we can. So it was a bit of a short intro of the different fundraising goes and no goes and financing options. So I realize it's a bit high over, but like I said, any questions we can address later. And back to you, Jonathan.
Thank you very much, Daniëlla, for a short but elaborate view of the different options. And I invite anybody who has questions to please share them in the chat, and then we can pick them up in the Q&A. We now move on to our second poll, which is about myths of financing. And I think Daniëlla already addressed a few myths when it comes to the time it takes to get to a funding, but also to line up different funding options and not just focus on one. So if you could please answer that, and then we'll get back to those in the Q&A as well. And then I'll move to Bart, because I think business angels offer a lot of opportunities and are a very specific type of financing, actually. And I think it's very, very good that Bart can share some of his thoughts on business angels and also, well, some of the experiences he has. So, Bart, you also already quickly introduced the Business Angel Network. But can you please state some of the benefits entrepreneurs have when they, well, go into business with a business angel or multiple business angels?
Yeah, sure. Well, most of business angels are ex-entrepreneurs. So when you talk to a business angel, I think there's really connection on entrepreneurial side. What they are very keen on they have a lot of knowledge of the market. They have a lot. They know how to grow a business. And their passion is now to find entrepreneurs every now and then who look at them. So they are looking for founders who are really, you know, want to grow their business, and they know and how to do that. So it's very personal driven. It's family capital where they work with their own money. And this also means that they can decide sometimes very quickly, especially when they are on board. And you need some extra funding. It's just a matter of, you know, days sometimes. So that's I think that's one of the benefits of angels, especially when you when you're looking for a smaller ticket. They do in general tickets like between 50 and 250K. I think that's a big of a first introduction on a general business angel in the Netherlands.
And what would happen if I want to work with business angels, but I need more than let's say 250K?
Yeah, well, of course you can go to several meetings. Every big bank has this business angels network, like Rabobank has as well, like Money Meets IDs. But I think what Daniëlla also mentioned is that you should be very picky on what kind of investor you're looking at. So what's the ideal profile of your angel that you're looking for? So this means when you need a bigger ticket, then you should form a kind of syndicate. So there are some angels who work together with each other, like 3-4 persons, so they can share their tickets together and say, okay, we're able to do, let's say, 500,000 or something like that. When you don't know these guys, we can also help you to build this syndicate. So our network I think it's big enough with 130 angels. We know their personal profiles, so that's also an opportunity that you try to get through these networks to get the right consortium group.
And so you really try to match a specific angel with a specific investor, and also try to match, well, let's say their personalities and their talents, so that they really can benefit from each other's knowledge.
Yeah, exactly. Yeah. One other option could also be that you try to find a connection with other finance opportunities. I mean, you have these loans with a RVO, like innovatiekrediet. So you can do both. Find a part of your funding can come through an angel and through innovatiekrediet. What you can also do is try to, what we do as OostNL, we also provide, equity. So that can be a combination, so that you get an early stage fund together with an angel. That's also an opportunity. Yep. We do a lot of deals with co-investing. It can be with a fund like Rabobank, all the funds that Rabobank has, but can also be with a funds that governmental organizations like us provide.
No. And I think it's really important that both what Daniëlla said and you're saying, that there are so many different ways to well, basically get the money you need to fund the progress of your business. And very often for entrepreneurs, this can be a very tricky thing, because you might be very focused on just one aspect when there's almost a whole menu of options to choose from, and also combinations between those options.
Yeah.
So I can also imagine, and that's also my own personal experience, that it can be very nice to work with a business angel who has this business sense and this business experience already, and not only benefit from the money he or she can provide, but also, well, almost like a mentor
exactly.
who can help you develop your business.
Yeah.
The second poll we're doing now is on myths about financing. Is there a particular myth about angel investing that you would like to bust?
Well, one of the myths is that these guys are very, old cigar smoking types, like the old, old industry, old money. So that's not the case in my network. I see really lot of younger entrepreneurs who sold their company. Let's say that there are a lot of them who had IT companies. So, but they also want to invest in other businesses. So, and the other thing is, we see more and more female angels as well, which is a good thing, I guess. So, yeah, that's one of the myths. The other myth is, I think a lot of you probably seen the Dragon's Den, broadcast on TV. And it seems like it's really fast, decision that they make, that you pitch and that's it. And they say, okay, I'm going to invest in you. And that's not the case in real life. I mean, the angels really do due diligence on you. So it takes time. Therefore, be prepared. And yeah, that's another myth, I guess, that angels really decide fast. And it's not the case, I think.
Yeah, I always reckon business angels very often have done very well with their own businesses, and they didn't acquire that money by making very on-the-spot decisions about their money. So I think what you say is spot on, that you really should take your time as well when you're looking for the right business angel, because they do the diligence maybe just also a bit different than a normal investor, where they very much look at the person they're investing in as well.
Yeah, exactly.
But like you stated earlier, once they're on board, it's sometimes very flexible, and they can help you out quite quickly when something happens. And I think I've spoken to several entrepreneurs lately who've had this experience during Corona as well, where the world changed quite quickly, and business angels were able to react quite rapidly, because they first and foremost believe in the entrepreneur they're investing in.
Yeah, exactly. Yeah.
How do entrepreneurs find you or find business angels?
OostNL is already 40 years active in this region, so it's through different channels, through our website, through our network, like guys like you, through all these meetings that we had in the past, and now we do on conference calls and webinars. Through my colleagues. I mean, I'm not working alone at OostNL. I have 125 other colleagues who are also in the market. So yeah, it's through accountants. It's really through a lot of channels.
Yeah. So it's not only that entrepreneurs find you, but you also track them down actively to find the right matches.
Yeah, I do. Yeah, so I try to go through all the most important meetings where I can see a group of entrepreneurs. So that's the case. Yeah.
And how does this matchmaking work? Because I can imagine a lot of people watching Dragon's Den have this view where you have a couple of business angels lined up, and then an entrepreneur comes in. But what is the reality?
Well, reality is, when entrepreneurs want to work with me and our network, it comes to I think that they need to be that they are willing to prepare themselves. We have several programs, market readiness program, investor readiness program, where we help entrepreneurs to do a lot of preparation before the door opens and before they have their well prepared finance plan. So there are three things that are most important, I guess. That's your cash planning and your fundraising. That's a continued process. So you should know how many cash you really need, and that's metrics that every investor wants to look at. The other thing is your market validation. So start, for example, interviewing your clients, know what their problem is, what they need, and if they are willing to pay. But really listen to your customers, what they need, and what kind of alternatives they've seek. And the other thing is that you really need sales expertise. So if you have no guy on board who's really good at sales in the specific industry that you're at, try to hire such a guy. It's all about sales in the end. And also angel investors want to see that the company is really able to grow 10 times bigger than you are at the moment.
Yeah. So basically what I hear you saying, because I can imagine a lot of entrepreneurs start off on their own, or maybe with one or two co-founders, and very often they're very quite similar, especially when it's technical innovation. They tend to spend a lot of time on the technical innovation, try to perfect that. But the things you're stating here, well, basically require different talents or different competence as well.
Yeah.
So what is your advice for entrepreneurs who, let's say, have a lot of expertise on the technical bit and know all the nuts and bolts of their innovation, but don't have the most interest in making a planning of how much cash they're going to need in the next 18 to 24 months?
Yeah. That was also on a quote that I gave to you. I think you should know what you're very good at, but there are a lot of points that you're not good at. I mean, that's what every person has. So building your business really also needs a sales guy, and if he's not on board and you have two really technical hotshots, which is really important, of course, try to find someone else who is and can through a lot of, I mean, for example, when you're a spin-off of the university, try to find students from another study who are like on the commercial side, like business, the business-driven studies, and try to find such a guy, or try to find some other entrepreneur who did similar things in the past and is willing to help you. That's why you need to build your team. And I mean, talking about business angels, don't run into the chicken and egg problem. Business angels really look at your team, and your team should be as good as possible. It's not if you lack, for example, the sales guy in your team, the business angel won't be the guy who's going to spend 5 days per week helping you with the sales gap. You should fill the gap yourself. That's my main thing.
I think that's some very strong advice, and for everybody listening and watching, at Foodvalley we also try to help entrepreneurs finding their co-founders, or matching them with mentors or programs or business support where they, on the one hand, can learn more about themselves and maybe the gaps they have in the management team, and on the other hand also create a strategy to overcome this problem.
Yeah.
Thank you very much, Bart. That was very insightful.
Welcome.
I don't have any questions on the Q&A yet, so if anybody has a question about anything we've discussed so far this morning, please feel free, because we've got about 15 minutes left before we open the one-on-one sessions. I just saw the poll results coming in, and I think Rens or Daniëlla, you might want to react to the number one answer about the myths that banks tend tend to be risk adverse and therefore no option for startups. I see you smiling, Daniëlla. So
yeah, no, that's I was sort of expecting that one. No, and I think, I mean, to a certain extent, I get that. And like I also said during my presentation, for at least a more, how do you say it, more sort of formal bank products, it is indeed the case that they maybe require a bit more of you as a company. That said, I think Rabobank, but also other banks, try to do a lot in helping startups and also bringing innovations through. So I think, yeah, like I said, within Rabobank, we really try to do a lot to support also young companies, and that might not be with like a normal loan, but we do have other products that we can help you guys with. So I think, yeah, maybe banks are risk averse, but we try to be a little less risk averse these days.
and
Brent, do you want to?
Yeah, maybe good to add there is that you already mentioned the start and scale up bankers in the Netherlands during your presentation. I think that's I think a very valuable network we as a fund benefit from, but also startups benefiting from. They have the knowledge, the network in the regions, and they can really help you not only with traditional bank products, but also with an innovation loan, for instance. So I think there is more for startups than you might think. But yeah, in general, I agree that banks, especially for debt products, are risk averse. Also good to mention here is that what we do is equity, and yeah, we are willing to take on some risk.
Yeah. And also one of the popular answers was it's more difficult to raise early stage capital compared to later stage capital. Maybe Daniëlla, can you react to this? What's your take on this?
Yeah, I think I mean it's definitely not easy. I won't say it's easy to raise capital when you're early stage, but I do think there are a lot of options. And also, I mean, you and Bart just talked about it. There are really a lot of different pockets to tap from, different people you can reach out to, which I think, you know, the further you get, often the higher your fundraising amount get, or maybe you need more sophistication from the investor network you're raising from. So I would maybe even argue that it's the opposite. So if you're getting further along, then either you make sure that you have the right investor network already, so that you can continue with the investors you already have on board, or you need to have a really good view on the market and find new pockets to tap from, because I think actually there are more options for early stage company than for later stage companies.
Yeah, and I agree. And I think it would also help if entrepreneurs in all stages are very open about what they're looking for, because what I noticed when I joined Foodvalley is that there is also a lot of possibilities for financing that normally you wouldn't think of as an entrepreneur. There are government loans, there are grants, there are vouchers, a lot of tools which you wouldn't think of when you start your business, that you could fund your business in such a way as well.
Yeah, so, sure.
The other one, which was very popular, is make sure your valuation is as high as possible. And Bart, could you maybe comment on this? Because it, from personal experience, I know how difficult it is to part with some of your equity, and it always feels like you're giving away too much for too little money. But please share your thoughts on the height of the valuation.
Yeah. Valuation is always a difficult part, especially when you're a startup. There are a lot of methods to calculate your valuation, but it all depends on the numbers, and the numbers should come from the market. So, where are you at the moment at the market? If you don't have any, clients yet, then it's hard to convince an investor that you're worth 5 million. And so, yeah, it's. I can understand from a founder's perspective that you don't want to give away a lot of shares, especially in the beginning, especially if you know that you need a second or a third funding round. when VCs come in after the business angels. But bear in mind that we are through COVID-19. Also, investors are a little bit more risk averse. Talking from my group, I know that a lot of angels lost a lot of money on the, on the stock market. So taking more risk, investing in startups, they're more, yeah, they are more, how should I say it? Yeah, they take more time and they are more risk averse in a bit, which means that the valuations go down at the moment. That you see that the investment deals that are published in the last 4 months through angels go with a smaller valuation, and that's the case at the moment.
Yeah, so it's and I think especially what an important takeout is consult the market very early on, and also make sure you well, you have basically people willing to pay for the product you're offering, and very often it can happen that you keep trying to perfect the product before you launch it because you want it to be as good as possible.
Yeah.
But sometimes this also well, leads you down a road where you miss a lot of the feedback your paying customers would give you in much earlier stage as well.
Yeah.
Yeah. I used to run a coffee company, and what was very there was one deal that everybody would focus on, and that was the biggest exit that was made in the decade, and everybody would focus on that valuation because they thought, okay, that's the benchmark. But that's actually the outlier, and I think in most businesses and most niches you have these outliers which seem very attractive, where you think, oh, wow,
yeah,
it's startup at a 10 million or 100 million valuation without being live with their product, what happened?
Yeah.
Very often that's not a realistic case.
The funny thing is that there's always a round number. Yeah, but you're right, and to add you a bit, so most investors don't mind to talk to a big group of entrepreneurs. So start early to know what kind of language that they use, what they're focusing on, and sometimes it takes a year or a year and a half before the deal is done. I think so. Most investors talk to a lot of entrepreneurs, are willing to help them, especially when the technology is very interesting. But it doesn't mean that they're going to invest at that time. So the feedback, as you mentioned as well, that you can get from different type of investors is really helpful to prepare for the real funding round.
Yeah. We just received a question from Deborah. How could you value a pre-trade food and agri-tech startup? Rens, is this maybe a question you want to answer?
Yeah, sure. Well, that's a good question, and I think we're going back on also the statement Bart just made. That is honestly really hard, and also for us, especially because we are a bit later stage. It is important that the company made some commercial traction. That doesn't necessarily mean there must be sales revenue. It can also be pilots, for instance, and preferably paid pilots. But in general, yeah, we do our financial analysis, and in the end, there is an evaluation attached to it. But that valuation is mostly based on expectations and the progress the company made so far from a commercial perspective. And the funny thing about valuation is that they are always wrong. And the earlier the company, the more wrong we are. So yeah, I think the most important part, especially for pre-revenue companies, is to go to as much business angels who are focusing on the same segment. Speak to as much venture capital companies. Try to get the valuation from them and see what is a good valuation in the market. And I think that's the most important thing for a pre-revenue company.
Yeah, and I think if I may add to that is also don't just focus on the amount of money they're willing to pay, but also which networks or which expertise they can add and bring to the table to basically grow your company, because valuation is also very much about what the company is going to look like in let's say 2, 3, 5 years from now. But very often entrepreneurs don't have the skills or the team yet to get a company from A to B.
Yeah. No, I think maybe to add to that, Jonathan, I think that's a very fair point. And specifically for pre-revenue companies, we try at least to really get a good feel for what can be the market opportunity. So that also kind of links back to the point I made earlier on finding the right investors. I mean, obviously, we know more about food and agri than we know about IT. So, you know, probably we have a better sense of what the market opportunity for a food and agri company can be than for an IT company. So, you know, make sure that you speak to the right people. And yeah, and like Frans mentioned, it's good to speak, to a lot of people. And then again, and also Jonathan, on your point, it's not only about the valuation. Of course, it's a very important one, but also be aware that, you know, maybe the offer with the highest valuation might not always be the best.
No. Definitely, and to add on that, I think it's also important to look at the appetite of the investor for further rounds. So, yeah, the more appetite an investor has for to follow on invest in your company, the better it is for you. So maybe you can go for a bit lower valuation today, but if it means that you can bring on an investor with a large network on board that also has the appetite to invest in future rounds, I think that is more valuable for your company than just a higher valuation today.
And I think that's great answers, and we're almost through our time. But I would like to close also with something that I learned not at the beginning of my company, but later on, is that as an entrepreneur, you're actually wearing different hats. On the one hand, you're the founder, you're the director of your company, and you're very emotionally attached, but you're also a shareholder. Yeah. And the person you're bringing on and who's buying a stake in your company also becomes a shareholder. So you have co-ownership of the company, and this also changes the relationship you have with your own company. So I think it's also very important to be aware that, well, basically you're starting a relationship with somebody, and you're going to build your business together. I have one last question coming in, so I'll try to answer it in the minutes we've left. It's Clement Stolk, and he says, how do business angels assess the reality level of technological propositions in relation to the market potential, especially if the business angel himself is coming from another background? I think, Bart, this question is well, all yours.
Yeah, so if I understand your question right, is you want to know how they do the due diligence on this specific part when they are not, industry experts. Yeah, what they do in general is they want to talk to, they're just going to call some friends. They want to talk to your clients or possible clients. There's a lot of, there's a lot to find on the internet. But you have to convince them that your technology is as good as you tell. So they're going to ask you a lot of questions, and some of them might be stupid, but I mean, yeah, that's the case. So if they want to check if your answers are right, I think that's the way that they do it. They just call a lot of guys, see if it's, if they think that it's clear enough. Yeah, they have their networks. So when somebody came from IT and is investing in food now, there's something that really struck them why they want to do that. So I think that's how they do that.
So basically they're going to validate actually a company and a proposition as well, and really check if all the things the entrepreneur is telling about the technological proposition and about the business are spot on or if there are any loopholes.
Yeah, exactly.
Yep. Thank you very much. With that, we come to the end of our plenary hour. I think we've got a couple of spots left for the one-on-one. So if you are in this meeting and you think, okay, I didn't sign up for a one-on-one, but I would like some time with either Rens and Daniëlla or Bart to discuss anything about financing, business angels, the Rabo Innovation Fund, please tell Kai or Lonneke in the chat because they will be available and they can direct you to the rooms. We've got a full hour available for the one-on-ones. We'll end the plenary part now. So for now, I would like to thank Bart, Rens, and Daniëlla very much for your opinions, for your presentations, for sharing the knowledge. I hope we have enlightened some of the entrepreneurs about all the various options. And well, thank you very much for your attention, and I hope to see you soon. We have another webinar coming up on the 16th of July, which will specifically be about the different business support programs that are on the Foodvalley ecosystem. So if you're an entrepreneur and you're looking for business support or a program, please keep our website. Please take a look on our website and subscribe for the webinar on the 16th of July. And for now, thank you very much, and well, have a great day.